What's going on, guys? Welcome to another episode of Full Transparency Trading. I'm your host, Sebastian. We're going to get into the report card for the day. As you can see on these accounts here, we took 10 trades overall, 9 of which were wins, 1 was a loss. The one loss was a quick wick out in 47 seconds to negative $750. So overall, we earned $3,937.50. We ended up taking home $3,187.50. So that's 10 trades. The largest amount of money that we won on the day was $1,500. The average winning trade was about $437. The average trade time was 3 minutes and 8 seconds, and the longest trade time was 8 minutes and 32 seconds, which is pretty funny. And that's all from today. We also have one more that we can look over, and this one was a perfect 1-for-1. I set this trade up at about 4 o'clock this morning. It activated, as you can see, at 7:38. It took about 36 minutes and 9 seconds. So this was an intraday setup right here, where the most we saw in max drawdown, or the most we saw negative, was $15.50. So that is an excellent trade. If you can set a trade up that only draws down a fraction of 25 cents, that is a brilliant trade. Okay, and this was just one trade with 10 contracts in it that we set at the high of the evening at about 4 o'clock in the morning. We didn't expect it to hit until, well, we didn't expect it to hit at all. Actually, I thought we were just going to continue to fall, but we finally hit it. Took about 36 minutes for it to go all the way down to $5,000, and we made $5,000 on the trade. So one trade, 100%. The other trade, 10 trades, 9 of 10 for a 90% day. And that's it for the report cards. Let's go ahead and move on. What's going on the charts real quick? All right. Let's head back over here to the chart. So you guys saw the trade that we took earlier, the 750. We hopped in and got the other $250, like right about here, so that we could get our $1,000 worth of trade. It pulled down to the blue line here at 57.43, wicked through it a little bit, came right back up, went to the resistance, pulled back a little bit, broke through, and of course we were heading towards the 200 EMA. And like we were saying, the 200 EMA will shift over time and pull it down. But as always, these lines come off of the 4-hour time frame, where you see I have a demand zone X, and like all this information, like all this extra detailed information comes off of the 4-hour time frame. And then when you shrink down to the smaller time frames, it gets less and less congested as time goes on, as you can see. And then you get down to 5 minutes, and then you refresh and you have just a few lines, and then you get down to the 1 minute, which is where we trade. And that's why we trade off of the 1 minute. So we have all of these details from the 4-hour time frame and the 1-hour time frame that lead their way down to the 1 minute time frame, and don't look crazy, but they tell us exactly where we should be looking to take opportunities to trade, things like that. Of course, you have your 9 EMA and your 23 EMA and stuff, as well as a 200 EMA. But if you're having reactions off of these 4-hour points of interest over and over and over again, it's usually a safer bet to take your trade off of the 4-hour point of interest. Like, let's say we wick through here, we struggle to get any higher to this one, and then we come on back down. You can take a trade to the downside, and then the trend will follow that trade. But it's much easier if I'm just taking them off of my point of interest from the 4 hours, instead of trying to trade off of the 9. I don't trade off of the 9 or the 23, because they shift. Look at, they shift all the time. Down, then we're going up, then we're going down, then we're going up, then we're going down, then we're going up again. So they shift all the time. The only one that I actually take trades off of is this red line here, which is the 200 EMA. And then it'll be just based off of whatever's moving for the hour. So earlier today, the 200 EMA for the 5 minute was really good. Gave up some of the best trades. The 15 minute gave up some great trades, but the 5 minute was pretty much the one that I focused on for like my big trades of the day. And then the 1 minute is what we started hitting towards the afternoon, like when we were getting ready to close the market. So you had right here at 6 o'clock, you had again right here at 3 to push it down, and then we came right back to it at 4 o'clock at 4:03. So we took it up from right there to the blue line. But the blue lines help me know off of 4-hour time frames when to likely take trades. Like, you see some consolidation there, like, cool, we're going to the upside. You get a bust to that right there, you know that they're going to get a candle that's going to close there at some point in time. So it just continues to climb until we get there. And a lot of times what these are is they're about $7 to $10 ranges. and it helps me get those $5 trades that you guys see all the time, or those $3 trades that you guys see all the time, because I'm within the range on these. And as long as I'm taking it towards the bottom of the like as close to these blue lines as possible, usually I'm gonna get the best type of price action, and it's not gonna be too much of a pullback. But that's it. It's not really like, honestly, I don't think it's much of a strategy. I think it's just my understanding of the higher time frame lending itself to trading off of the smaller time frame, and having these clues here to help me know when to possibly take trades. You know, there's no 100% accurate trader. Like, even though I have like a few 100% days under my belt and stuff like that, I think my trading accuracy is about 80%, and then like my down days are like 63%. You know, but lately I've been hitting some really good ones, and how it averages out is you may go down in a trade but still win the trade. So just because you went down in a trade doesn't mean you're going to lose the trade. Now, if you go down in a trade and you're stopped out, then you will lose the trade, and that's how you get the 9 out of 10 versus a 10 out of 10 had I been able to stay in the trade. But you got to protect yourself with a stop loss. So sometimes you're going to get stopped out. We're breaking the 200 EMA, we're breaking the blue line as well, so we're heading back up to this point right here, into this line right here at 67. We came all the way down, so they want to draw back up. As you can see right there on the RSI, we were down to like 24, and now we're kind of up high. But if we can level out right here for a little bit, then we'll be able to push a little bit higher. But we're still in the downtrend, and we still have about $20 that we can go down. If you look at the 15-minute time frame from earlier today, we were down here at 33. We went down to about 32.75. So 33 flat then is about where we can go down to. And we haven't hit there again, so maybe we don't go back there, but we are still very much in a downtrend. Even though we keep pushing up and pulling back down, we keep pushing up. We do have higher lows, and we're starting to create some higher highs, but we still have plenty of pullback space. And you're talking about $30 pullbacks, you know, all the way down and all the way back up. So until we break this bearish trend, I'll keep my bearish sentiment, and I'll just take trades from the upper areas of the consolidation towards the downside. But you guys have a great day. This is it for the night. I probably won't get back. I don't even think I'm gonna take trades at 2 o'clock in the morning. Maybe if I like get up at 3 and see something really good, I'll get into a trade and I'll put it up for you guys. But I'm tired, so I'm just gonna call it.